Okay, here we are doing the silver trust. Once again, silver had gapped back down to its support level below its key daily moving averages. And the reason why we're using the daily chart this time on a standard technical analysis is to let people know that silver in itself, and gold was down big today, and the markets are really extremely volatile as we said they would be. But on the silver trade here, this is a major area. We rallied right back on up. And let's take a look at how these rallies work so that you can see that when you're in downtrends, that we had come down and we tested this major support level. We rallied up there, and then we broke below the neckline here. In the shorter term, when we rallied up to this neckline right across here, this was that key area, and it started with the gap down below the key moving averages. Now, having said that, what we're going to be looking at very clearly, and I do apologize if the audio sounds louder than it should be. We're not yelling at people, but, you know, YouTube has a problem sometimes with the audio. The thing that you want to know is that you haven't gone into a daily sell signal, and that's or a daily buy signal yet. This was a sell signal over here, and we've kind of been traveling along here. Silver doesn't recoup or get really strong again until the daily buy signal gets up there, okay? And that the amount of trade that we have off of this lower support line where we rallied up, gap down, and we tested it, you want to see bottoms get tested that way. And the range on the SLV today is it closed at 35.50. So we hit the lows at 33.78 to the trend line. Then we've come back up toward the intraday high was to short that. We're below that. You're going to have to work back up above these key moving averages. Another thing about simple technical analysis, you know, SMF has a system. Technical analysis is always a lagging factor, but look at the red line. It crossed over the 100-day moving average, and look at the 10-day simple moving average. It's pointed down. The upward resistance is going to be right here at this lower neckline on SLV, and that's going to be right there at 35. So we had broke above this particular neckline over here where that 34.99 is going to be the key here. That's where we had that gap over there. Now we're going to come back up and hit it. The bearish part and where the challenges are going to remain on this is you're going to have to close and consolidate and build a base above here and run back north of there. Those simple moving averages, instead of pointing down, are going to have to flatten out and start to rebuild themselves. And you're going to have to hold above this particular trend line at 34.28 on the lower end of that support level. The actual trade itself, as I said, MMTs were popping there in that Dow. We were down over 200 and some odd points. This is how, so it's a gap down to support. But once again, I will tell people that the MACD is a little bit going down. That's the sell signal. So upside resistances up into this area here, where we used to have support here, and we broke down right into there. That as you go up and clear that resistance and you get up to resistance to this one, you should be selling into it. Because these things are going to have to turn around. We're just going to remain in a bear and bull trend as the bears get squeezed here and the bulls get stopped out over in this area support. It's going to be the fact that these moving averages cannot continue down. We'll be updating it right along with its co-partner, and that symbol is the AGQ, which is a silver. This is the one that we trade. Now, if you go back on stockmarketpending.com homepage and you find out all about these, we talked about this one in the shorter term, that we would come down and we would hit this 200-day simple daily moving average. This one is much more volatile, pays a lot more money, but let's take a look at the similar bottoms, as we should. And right across here is your neckline, kind of like I just showed on the SLV. The 200-day simple moving average is right there. We gapped down. We rallied on up to the neckline. Where was that neckline? That was where we broke and gapped down over here. And the 10-day moving average is down. The MACD sell signal is down. I could say that we will remain in a trading range. The underlying support here is going to be that 200-day simple moving average. The neckline is going to be right about there, where people would look at selling into the move. The 10-day simple moving average has crossed over the red line, the 20-day simple moving average. Therefore, you have weakness in it. So any up move, you'd be a seller into it until these things turn around. Once again, that's the silver trade.